first, I'd love to talk about Snowflake's business. So what does Snowflake do? Let me take a crack at describing Snowflake's business, and maybe someone experienced in the technical side can kind of jump in and offer more details and insights. So from what I understand, Snowflake is a company that's trying to solve the problem of data analysis. So with cloud computing rapidly becoming the future for most big companies, I believe there's an increasing amount of data sources from various platforms that need to be integrated and analyzed. So Snowflake, what it does is it integrates all of a company's data from various sources into its own platform in an accessible manner. So what that means is a company's data engineers can view, sort, and analyze data in a meaningful way to find value for the business. So their business model so far seems to be pay on demand, or basically pay for what you use. And their clients include some major players like Adobe, Capital One, Square, and DocuSign. With that, kind of like to open up to anyone more experienced in the technical side, or just want to talk about the business model in general.
I can comment on the competition in the space, but it sounds like business model might be better for fundamentals for now.
Yeah, we'll go through like kind of a SWOT analysis afterwards and talk about its strengths and weaknesses, opportunities and threats. I'm thinking if anyone wants to hear about any sort of the technical side, like what makes Snowflake do what it does, like how does it perform better than the other competitors relative to its product offerings?
I'll speak very briefly on this, just like in tech industry, like sure. Myself. This provides, if you are familiar with SQL, for example, this makes it easy for you to store data from multiple sources in one place and figure out what to do with that data, like either put it into a dashboard, answer questions like how many of my customers have done XYZ across multiple platforms. So one big problem I think potential customers would come across is they need to query for data in different sources where they have that information, but they can't have a holistic view of how to make inferences on that. So Snowflake and companies like it provide a platform for that.
I think the biggest differentiation that a lot of people miss out is that it's taking two of the biggest concepts, big data analytics and the public cloud. Those are the two biggest hot things that are coming on right now, and being able to combine those two right there, especially since two of the founders originally came from on-prem big data like Oracle. They're taking that on-premise concept and bringing it up to the cloud and making it usable so that any company can be able to drop their data up in the cloud and be able to analyze it, when back then it was much more difficult to be able to do if you're a smaller company, and be able to pay for it as you go, which is the model that public cloud is so strong at. You don't have to invest in huge amounts of infrastructure. You can just pay as you go, kind of like AWS or Google Cloud.
I think I'll just drop in a point. I think more and more CTOs are actually preferring neutrality. So rather than just sticking with, for example, your Google Cloud platform or just Microsoft Azure or just Amazon AWS, they prefer to actually have their data stored across all three of these more popular public clouds. And from there, you actually need somewhat like a middleman to actually bring all this data together. So for example, how you actually extract data from different public clouds is actually in different versions from what I read, and they can have some compatibility issues, and Snowflake is kind of like that middleman there. And to add on with what Nguyen from Austin actually said, I think I mean, for those, I understand that some of you actually come from biopharma, and maybe this could be really hard to understand. So I actually thought of kind of like a very maybe a very weird example, but I'll just give it a shot, right? So you think about it, right? If you look at just data alone, you can't really tell much about a company, right? For example, where are your sales coming from? Let's say if you run a retail store, which county or which state actually produces the best sales, right? Which of your outlets are not performing well? So to know this, you have to actually get all this little small data together, and you have to look it from a helicopter point of view. So think of data kind of like the ingredients on your pizza, right? I mean, if you just eat pizza by individually, just you eat the bacon itself, you just eat the dough by itself, you can't really enjoy the entire pizza, right? But if you actually look at all these analytics together, it's kind of like eating the entire pizza by itself. And sometimes, for example, if you want, let's say Super Bowl season, and you want to have an oven that is the entire size of a football field, right, to bake like a pizza. So imagine this to be crunching out a huge amount of data, and to kind of crunch out this data, you need an oven, right? So to actually, for example, if you want to bake a really huge pizza, you have to the size of a football field, for example, then you have to have a really huge oven there, right? So the thing about a cloud is that rather than you building a huge oven yourself, you can actually rent this oven, right? Because it's not every day you get a huge order, or every day you have Super Bowl where you need to um, make such a huge pizza. So I don't know. I hope this analogy helps for those who are coming from industries that are not analytics or cloud related industries.
Yeah, I think from my perspective, the way I look at Snowflake is a bit interesting because most traditional data warehouses, we talk about AWS, talk about Azure, Google Cloud, they really have a single layer, right, for storage and compute. But I think Snowflake takes a different approach to that. They kind of separate data storage, data processing, and data consumption. So I think storage and compute resources are completely different, and I think they need to be handled separately. So I think sometimes when there are certain files that's being stored inside the warehouse, but every single time you have to compute, you have to access back to the file again, and that is not, I mean, cost efficient, right? But Snowflake's the additional layer on top that just compute. So every time when you compute certain data, they just take that little bit of information that they need to do the processing. So I think in that sense, actually, people do save a lot of money because they save on a lot of computing costs.
I've got a question. I was wondering if anybody can shed some light. Snowflake says that they can take from differing data points and extract intelligent decisions or patterns and all that. I'm just wondering how viable it is from different platforms. How easy it is is it a really proven solution? Is it easy? Is it ready for prime time, or is it still buggy or whatever? Does anybody know anything about this at all? The idea sounds fantastic.
So Pong, I had a friend who actually downloaded demo. I believe the demo is there for everyone to use, and you can actually easily just import your data points from any of these public clouds. If you talk about Microsoft Azure, Google Cloud Platform, or as well as AWS.
Mm.
Yeah. So I think Snowflake has integrated, maybe I'll just take a shot, right? From what I understand, and from I think quite a few customer reviews that I read. So basically, the way they do is they don't really copy the actual data and create another so-called like a place where you host the data that you need to do for your so-called analytics and to extract insight. But what they do is, I saw they create a sort of like virtual warehouse in the cloud. So I think they are taking the concept of like data lake, if I'm not wrong. So from the different source, whether is it your data is in AWS, Azure, they are actually able to bring it together into this one place where then you can actually the users can actually work on the data in the virtual warehouse to run the computation that they need. So I think it is really quite interesting to see them being able to separate the storage and compute. But beyond that, I think they actually integrate the system quite well for the distributed storage and compute solution. So it's not just like when you scale up, you're not just running computation off from anywhere, but it attempts to, what the system does, attempts to do the computation stack. I believe it does it closest to wherever the data is, so that it actually reduce the latency a lot, if I'm not wrong. Yeah, but one thing I'm actually quite curious, actually after reading so much, is that I'm not sure if someone technical might be able to enlighten, is that they have the separation in the storage and compute. So now I can understand the compute part more, but for the storage, it's like, can they actually replace like traditional database management? Let's say maybe as a company, let's say as a credit card processor or something, then each time the transaction happens, they have to store this database and what. Does Snowflake take over that role? That's something I'm not very sure.
There's a tough question.
Yeah, maybe someone can, because from what I know is that so far, because there's so many other database management out there, but from some of the review I read, like they seems to, especially because we know like now they are working with all the big cloud providers. I don't think they're just using the infrastructure, but from what Snowflake actually says that the customer can store their data wherever they want. So I'm not sure whether Snowflake actually does the actual database like operation itself, or do they just handle the more like analytics portion much later? Yeah.
Yeah. Actually, we do have a guy that is from Snowflake, right? Over here, I think. Oh,
Sam, are you muted?
Yeah, Sam, I think you're on mute.
I can't seem to hear you.
Can you hear me?
Yeah.
Okay, great. Yeah, we had Jackie from Snowflake who wanted to join us, but I'm not sure if he's able to anymore. I understand he's pretty busy with Snowflake IPOing.
Yeah, it's going IPO today.
He'll be a millionaire soon. But yeah. Okay, well, if we can't answer that question, do we have anything else about Snowflake's business model? Or wait, I think Chris had another question, which was, does Snowflake clean up or match up previously incomparable data types, or do they rely on customers to upload their own data manually? I guess the presumption would be.
Okay, at least from what I understand, okay, which is why I still have that question I asked earlier, is that I know Snowflake, it sounds like they don't. So the customer, like, let's say they're operating, let's say a credit card processor or something. So every transaction, they have their database and all this data is there. Snowflake don't actually mess with the actual raw data or original data. But then somehow they are able to create this virtual warehouse where they sort of like, I believe they sort of mimic the data, and from there the customer run the processing from the virtual warehouse rather than the original data source. So But yet then they state they have this separate storage and compute. So I'm not sure where the storage will come in if let's say they don't really match with the original, unless they're talking about storage of the temporary virtual warehouse. So that's the part I'm a bit unclear about.
Would it be okay if I just do a quick share screen? I saw something online.
Yeah, sure.
I
How
think
do we do that? Do you have the option to do it at the bottom of your
You should have a button at the bottom that says share
yeah.
screen. Click that button and then choose the screen you want to share.
So I'm just doing some comparison
Oh, okay.
because we have, AWS Redshift, we have Google and Snowflake, which in a way, I think Frank Snowman, which is the CEO of Snowflake, says that sometimes they are friends with AWS, Google, sometimes they're enemies because they do have competing products as well. So to Herbert's point, I'm not sure whether this is accurate. The database on the AWS, so it seemed to suggest that S3 actually they would do some transformation with it for the data before it's being put to the Redshift, right? I think for Google as well, there's this process data kind of thing. But Snowflake, I'm not really, I don't really know how to make out of this. Like, is this a way where data is being processed, because this is data factory, data pipeline to Snowflake, but in between does not share that the data is being processed or made compatible with Snowflake. I'm not sure, but anyone could actually jump on to shed some light on it.
Yeah, well, from like my understanding of this, right, is like this is one, it looks like it's one example of a data pipeline, right? And it's using kind of inbuilt functions in Azure. So like basically for any three of the cloud providers, they'll provide, like AWS has like Lambda and like S3, for example, for data storage and like manipulation, like functions, like serverless, as they call it. So I think like, to your point, I think like you're right that, and this was like kind of my question too. It seems like all three cloud providers have their own competing products to like with Snowflake, but it seems like Snowflake's maybe is a little more customizable. That's just my impression. But I think all the base operators are from the cloud providers themselves.
Yeah. Yeah, but it's interesting to note as well. AWS, the AWS Redshift in terms of growth rates, right? I think Snowflake, I think perhaps it's a low base kind of effect. They are growing faster. But I often think about companies whereby AWS, they have so many products, right? So and I think sometimes when it comes to attention, they might not be able to allocate sufficient attention to every product. But Snowflake, they are doing this product. If this product fails, there goes their business. So this is kind of their focus. I seem to be that when a company is focused on a single product, they tend to become better. But I think the question I still have at the end of the day, how is Snowflake comparatively superior than existing products out there in the market? Otherwise, it could be just a hype thing, but then can they really deliver? But so far, it seems like they are delivering, so that's quite good.
Yeah,
I think that's a great point. Oh, go ahead.
I do want to like mention like the growth metrics. Like you can see, like even though it's 100+% increase, that's a very flawed metric, right? Like,
yeah,
like because it's a smaller company, any like more customers they get will obviously grow it faster, right, than a more established player than
right.
let's say AWS or Google Cloud.
That's true. Coming from a small base, every little thing will move the needle more. So I think that's a great segue to go into the next phase of our chat, which would be evaluating Snowflake as an investment. So for this segment, let's not talk about the investment strategy yet. but let's talk about Snowflake, the company, as an investment. What makes it a compelling investment or something that you might pass on? So maybe a easy way to do this would be to talk about its strengths, weaknesses, and so on. So let's start with the strengths. And I'd love to hear from some investors or professionals who've worked with data before. So as far as I understand, some of their strengths include easy integration across multiple platforms. Apparently, it's much better than other systems and other platforms such as AWS's Redshift at integrating data across different platforms. It's a lower cost to clients because of that pay-as-you-go model. And they have some pretty big name votes of confidence that can help them with this platform. And I believe, as Kelvin mentioned, their sole focus is on this data integration and data analysis and managing data in general. So that could give them a comparative advantage. What else have we not discussed that is a strength of Snowflake?
Okay, I think.
Love to hear from Gary or Vu about the technical side, the data part, since you have data backgrounds.
So calling me out right here. We just started looking at like about a month ago, and so the biggest differentiator that I found was that it's data scaling. That a lot of the other solutions would not scale as much as Snowflake would be able to. So that was a huge differentiator that I saw. But another one that I found that was interesting was, and it's not the technical side, but the management side. Their CEO came from ServiceNow, and he actually was in retirement. How often do you see a CEO go out of retirement to lead a company unless they were really good at it? And he was he was a CEO of ServiceNow, which is a big cloud computing company, and so he's already been able to drive this company forward. And ServiceNow is a really leading platform that we use and see many enterprise solutions utilized, and so he's able to take that experience and mold it into Snowflake. But yeah, we just started doing more research into it about a month ago.
Awesome. Is that something you're looking to integrate at your company?
Yeah.
Great. And have you used a similar platform in the past? Has your company used Redshift or anything like that?
No, we haven't. Everything is on-prem, and so we're still formulating a plan to shift the whole company up into the cloud right now, and so trying to figure out how to do big data analytics. Snowflake was the one that seemed to be the most favorable. But the shift to cloud is a very difficult shift right there, and so it's really hard. And earlier, I forgot who, but one of the things that a lot of companies are moving towards is trying to go like Lambda function serverless, trying to, rather than build a containerization and virtualization, trying to move towards a more just functions. And when you have less footprint with infrastructure, it works a lot more seamlessly. And the fact that Snowflake is able to integrate with serverless very well makes it very very favorable. That's why we looked at it, because that's the direction that we want to go in the future, rather than just have spinning up containers. Rather than having all these containers that we build and then making API calls, why don't we take out the middleman, have the API calls directly to the functions, and then now you save yourself a lot of money.
Awesome. Yeah, it's interesting to see that evaluation of Snowflake from the perspective of a company that's looking to adopt a solution like this. Let's see. Gary, if you're here.
I ask a question based on just now. So based on what you said about the serverless, would Snowflake be able to run like actually applications, functions, and things like that. So it sounds like it's something beyond like just data warehousing.
Sorry, I missed the last question.
Oh, it sounds like it's a bit beyond like just only data warehousing. Okay, at least based on the use case that was shared just now.
Yeah.
Oh, yeah.
Okay. Let's see. I think we have we've discussed its growth opportunity, but there's also some weaknesses, right? Like Snowflake as a company is not profitable yet. In fact, they've been losing money every single quarter, and they noted that in the future they actually expect costs and expenses to increase significantly as they continue to invest significant resources to develop their platform and expand their various teams. So one of the things I want to discuss is several things. One is the significant data breaches or disruptions involving the platform could have a big effect on its reliability. And second of all, the performance of the company has to be exemplary for years in order to match its valuation. We can discuss that later in terms of the valuation and the investment strategy. But one of the greatest weaknesses of Snowflake currently that I see is that its costs and its gross margins are significantly influenced by the prices they're able to negotiate with public cloud providers, who are also their competitors. So that seems to me to greatly limit its growth because its biggest competitor is, correct me if I'm wrong, but I believe its greatest competitor is probably Amazon's Redshift, AWS, and a couple of the other platforms. And Snowflake currently relies on these public cloud infrastructure companies in order to provide their service. So given that AWS has a strong interest in, competing and not losing to its client, and that Snowflake is dependent on its negotiations for handling its costs, it seems that AWS and various other providers have a strong ability to kind of hold them back unless they're able to find some other solution. Is there some other solution that you guys can think of other than building out their own infrastructure? Or
I have a question. I have a question here. Have we established that Snowflake actually has at least two streams of income, which is storage and also the processing part, or is it just the processing part? Because what you just talked about, Sam, regarding competition from AWS and even Microsoft, because for them is basically storage. So have we actually established that Snowflake is also going after data storage also or not?
So what I gathered is 80 to 90% of the cost comes from computing. Computing is usually the more expensive part of what their clients will normally pay. So I read somewhere where probably the data storage will probably cost a client $2,000, and the computing will probably cost you $20 to $30,000. I can't remember the numbers offhand, but they earn more money from the computing portion rather than the storage. Because storage, if I'm not wrong, is pretty cheap nowadays because of this public infrastructure that's available out there, and it's kind of commoditized. So I don't think Snowflake is competing on storage, but rather competing because the way they build the infrastructure, it makes it faster for their clients, and that's where they are competing in, which is the computing part.
I think so too. The product revenue includes computing and storage and data transfer services, but I believe it's mainly the computing because the consumers consume all of these resources as a single integrated offering from the company. So the customers have the flexibility or ability to use more than their capacity during their contract term, and they can basically pay as you go. But I think their consumption-based business is what is currently distinguishing them from subscription-based software companies. So that's an interesting note too, that their business model is a bit different. That's not subscription-based, but rather pay as you go. So you can look at that, I think, as a advantage or disadvantage. Customers probably like the idea, or from my friends who are data scientists who talked about it, they like that Snowflake offers you to just pay what you use rather than subscribe to the whole thing and only use part of it.
I think someone talked about the moat, or whether they had any IP or any claim to some special sauce that they have, Snowflake. Because, you know, big outfits like AWS, Microsoft and all that, you know, it's a matter of time that they can, I would think that they could come up with a solution compatible with Snowflake's, or even better. I'm just guessing here. And that they have legacy customers and all that. It's not difficult to reach out to your own existing customers offering the same or better solution that Snowflake has. So it could be a strength, like you said, Sam, and it could be a weakness also, because going forward, it's much easier to sell in-house, basically. And don't forget Salesforce and, well, I don't know about Warren, you know, I mean, that's a separate thing, but Salesforce has invested, or at least is investing. So that angle has a lot of weight also, you know, so it's a guess right now whether it's a strength or not, but it does sound like it's not that difficult to sell to your existing customers, meaning it's a weakness because, like I said, Microsoft and AWS and all that can, maybe even Google can invest in solutions that can compete down the road. And one other question I want to ask is whether we are thinking about the next Microsoft or Apple, or are we talking about a momentum run, a short-term investment? You know, I don't know when we're going to discuss this. This is the first time I'm here, Sam. Thanks.
Sure, no problem. That's a great question. Let's finish discussing the Snowflake as a company, and then we can move on to the investment strategy.
We will discuss it.
Yes. But yeah, rest assured, we will discuss that. Yeah. So I think we can all see that Snowflake has a lot of market growth opportunity. And, you know, we're basically wondering whether the price is worth it. But what are Snowflake's greatest threats? Like, okay, so Snowflake currently operates on those public cloud infrastructures, and a substantial majority of their business is actually run on AWS public cloud. So there's a risk that one of those public cloud providers could use their control of their clouds to bundle competing products, provide unfavorable pricing, leverage their customer base to exclude them from opportunities, and maybe resource and partner. They have like much more resources too, as like larger established companies. So I think those are all significant threats. And additionally, Snowflake operates in a highly competitive market. And if Snowflake doesn't execute, their business and therefore stock price could be harmed. So I think those are interesting points to consider because there's a lot of hype on Snowflake right now. Like they've got, you know, Salesforce, they've got Warren Buffett backing them, or at least Berkshire Hathaway backing them. And there's this, I think it's the second or third most anticipated IPO in this year or recent history. So yes, I think there is a lot of good questions we need to ask ourselves in terms of whether it's worth the price tag or not. But yes, I think John brought up a good point in the chat that their economic moat is that companies don't want to be too reliant on any one cloud infrastructure. So Snowflake's ability to integrate across several clouds is very relevant for that. Any other ideas on the strengths or weaknesses, opportunities, threats? Anything about the business?
I think in terms of weakness, Sam, you already point out something earlier. So I think it's a concern that I think also going back to the point raised, is this like the next Microsoft, Apple kind of thing? I do believe it is in terms of the technology aspect, but whether Snowflake will be the company to do it long term going ahead, that's something I'm sure of. Because as you see, Snowflake is built to take the resources from the big cloud providers. So it's more like a software driven thing, and they are still relying on the infrastructure a lot. So I remember reading somewhere for Microsoft that I think it was sometime end last year, December, where Satya Nadella actually mentioned that Microsoft was actually looking to the solution to separate storage and compute to actually align more to their customer. So it does sound like something along with what Snowflake has done. So if Snowflake could do it on their infrastructure, I don't think it's that hard for them. I don't know how hard it is. I'm not really that technical, but I do believe maybe the cloud provider will be able to build it too. The only question is whether they can integrate with the other. So like if Azure has a solution, I think AWS will likely be blocking them. So yeah, but it's something that I think we have to take note of. Yeah, definitely.
That's a good point. What about Bibiana? I know you had some thoughts and questions or ideas about Snowflake too. Would you like to share some of those ideas?
Yeah, actually, I think Herbert pretty much said everything that I wanted to say, because right now everything is hosted on AWS. So I think, I mean, I don't know what they're gonna do to Snowflake. Like AWS one day could just tell them that they are gonna increase their prices, and I don't think Snowflake can say no. So I think they're kind of like trapped in something that I don't know if they have any long-term plans for. I think it's a bit too early to tell now. In terms of valuations wise and all that, like, to be honest, nobody can predict the future, or like where this is going to go. So that's generally my thoughts about it.
I would like to just drop a quick comment on it. I think in a lot of cases of companies that we invest, one of the key criteria, I mean, this is something that I got from the book that I was reading when I was pretty much early when I started investing, is that a company must be able to control its destiny, must be able to be in full control of its operations as well. So I think the investment book gave an analogy of a guy of okay, I think there's some interruptions. Give an analogy of let's say, just thinking that you're standing on a carpet, right? What if one day anyone could just pull the carpet beneath your feet, and what would be of your operation? So I think the biggest risk is actually like what Bibiana has said, AWS trying to raise the prices, trying to disrupt the business. And to me, I feel that at the end of the day, if you don't own the infrastructure, then anyone could really play punk on you, So that's something that I do not like. But in the same way, where Snowflake shares its services, I do believe it also promotes AWS, Google Cloud, Azure in terms of the storage side as well. So it's a very tricky fine balance that they have to operate on.
Right.
I've got a question. If somebody can shed light on this, how new of a market is this new service that Snowflake is trying to mine, trying to get into, and how big of a market are we experts projecting this to be? I mean, AWS and Microsoft and Google, are they providing a little bit of this kind of service that Snowflake is trying to get into right now? Does anybody know?
Yes.
Actually, AWS, yeah, the big players does have it. So that's why I think if you read around, there's comparison with like Amazon Redshift. So data warehouse is not something new. In fact, if you look further back, I think there's this other company, Cloudera. So they also do data warehousing, I think with Hadoop. But yeah, so I think what Snowflake does is it actually improves the so-called like performance aspect even more with the way they design the data warehouse architecture and things like that. So it's not said something new, but in terms of growth, I think it's coming up more and more because data insights, data analytics is something that company has been looking at, but in the past it has been more accessible to big enterprise. So SMEs usually you can't really afford to do all these things, but with the way that Snowflake does it to be able to bring down the cost, improve the efficiency, I think more and more companies most companies are interested to look at it, but they just couldn't afford or they didn't have access to it. So I think it really is a bit of a game changer, and I think the market, the addressable market is quite big. Yeah, but if you are saying whether it's new, I don't think it's new. It has already been in the ideas of a lot of people for a long time. I don't know. Anyone else can share maybe like other insights.
I think Lou had an interesting point too that, do you want to talk about that, Lou? What you shared in the chat.
Yeah, I'm thinking is that at this point, how big it can grow is kind of a question mark. It is it is easy to use. That's an advantage, and also it has the integration with Python, which is pretty much the future. How the big data integration, all those fields can work, which is a plus part. On the other hand, it does not have the same kind of reputation as the Amazon or Microsoft. And a lot of the big companies are very, very nervous about putting data in the cloud, unless it's really proven things. And the other part I made in the chat window is that the service model is offering so-called what they called the dedicated resources for the customer, which is great from the customer point of view because the performance can be great. But on the other hand, that is very much going to impact their long-term scalability because the resource they're going to have to purchase from Amazon or from other cloud providers. Because that dedicated services is very expensive scenarios. So that's my thinking about that.
Thanks for sharing that. Yeah, it seems there is a lot of good questions about their viability as a business that can put up strong, untouchable economic moats that other competitors can't touch. So there does seem to be a significant amount of risk. So do we want to continue discussing the business model, or would you guys like to move into the investment strategy part?
I think we can move on.
Okay. We do have a fair amount of newer investors today. So for the benefit of those new investors, I'd like to quickly go over what investing in an IPO is like. So maybe I'll just start describing it, and then someone else can join in with any thoughts that they have. So for the benefit of the new investors, an IPO is when a private company needs to raise capital because investors want to exit or liquidate their investment. So the company files to go public with the SEC if it's an American, if it wants to be listed on an American stock exchange, to raise capital from the public. Typically what happens is that some investment banks help them through this process, and as underwriters, they're also able to provide certain investors who are able to invest at the pre-IPO stage. So only a portion of the actual public shares gets released to the general public. So if you were to buy on the open market, that's what would be available. So some considerations when you buy an IPO are more than 60% of more than 7,000 IPOs in the last 40 years or so have had negative absolute returns after 5 years in the market. So buying an IPO is by no means a sure thing. That's the point I want to come across. In the past 30 years or so, the average 6-month return is about 6% over the average 18% first day gain. So there's a pretty strong trend that there's a first day bump or so, but over the 6 months, it kind of drops back down. Of course, this is general data and every company is going to be different, but I want to drive home the point that this is not a get rich quick scheme, and we've covered a lot of potential risks for the company. So more recently, in the past 20 years, the 6-month absolute and excess return has both been negative. So I want to talk about some of those things that could cause the share price to drop. One is there's a lockup period. That's a period that's basically insiders holding the shares right now can't sell their shares yet. That lockup period typically lasts 180 days or less. I'm not precisely sure how many days it is for Snowflake. The other point is for Snowflake's IPO, they were initially expecting to launch the IPO at a share price between $80 to $85. That range would have valued the company at $21 to $24 billion. But due to extreme investor interest, especially after Salesforce and Warren Buffett's Berkshire Hathaway invested, there's been a ton of interest from retail investors, basically people who want to buy on the open market. And therefore, Snowflake raised its estimated share price to between $100 and $110, which is an increase of 30% from its original filing. That's a lot. That implies a valuation closer to 28 to 30 billion. So the question we all have to ask ourselves is, because we're not in the pre-IPO, unless someone happens to be in there, if we're going to buy, it would be retail shares, and we would have to consider when to buy it and what we expect of our strategy. So let's talk about investment strategy now. But before that, are there any questions on the IPO? We have a lot of people who have invested in stocks here for many years. So if anyone has any questions, now would be a great time.
How does Snowflake or the investment banks determine the demand from retail investors pre-IPO?
Sorry, Albert, it's very soft. I wasn't able to hear.
Can you hear me now? How does Snowflake or the investment banks determine the interest or the demand of retail investors pre-IPO?
That's a good question. Anyone want to take that on?
Yeah, I guess I'm not an expert into it. I think there'll be more people who are smarter than me in this aspect. I think that this process, we call it the book building process, whereby you appoint a JP Morgan, Goldman Sachs, and you really get an indication of interest. And let's say if your book, let's say if you talk about book building, right? Let's say it's oversubscribed by 500%, 600%, and you realize that you cannot fulfill the shares because you are only allocating a certain amount out there. So what you would do is that during this book building process, you would kind of have a range of indication, and you see how many people are actually willing to buy the shares, right? So when it's overly subscribed, what will you do as an investment banker? You would try to increase the price so that you drop the demand, and in a way, you're helping your clients to get more proceeds from the IPO, and of course, the fees that you're getting is of course going to be a lot higher as well. So it's just a big book building process.
So are they already selling the shares at this point, or getting commitment to sell the shares, or for people to buy the shares at this point?
Not to the open market.
I think most likely yes. Otherwise, they wouldn't have.
Yeah, the bidding process is already started. Yeah, that's why you see like I think they recently, the recent I think was just yesterday, the news released that the IPO price is raised to 100 to 110. So I think there is quite a bit of demand coming in. Yeah.
So I guess like wealthy individuals or other companies are already buying into the pre-IPO price, and that's determining the demand.
Exactly.
I wouldn't say it's buying, it's more like bidding. So it's like, okay, maybe like they're issuing like 28 million shares. So let's say they open up, like everyone will bid for a certain amount. So if it's over, so I believe I forgot the terms, like over allotment. So out of everybody that bid, there's like a total combined bid of like maybe 60 million shares. So obviously you have to start to raise the price to allocate to whoever bid the highest or something.
Got it.
Yeah, typically you would, say Goldman Sachs is underwriting the deal, they would go to first the institutions, then the hedge funds, and then they would go to the private banks, and they would go to Charles Schwab and Fidelity. And then Fidelity would go to sophisticated retail clients. They would go to, their clients and see the demand there, and they would put an indication in. And the day of the IPO, the banker typically gets, normally the right way, to sit with the management team and the board of Snowflake and do the allocations. The allocations typically go to the highest paying, commission fee paying institutions and investors, and then the retail would get the remaining stub.
That's a great explanation.
Thank you.
Any other questions about the IPO process, the IPO itself?
Yeah. One more question. So let's say tomorrow morning at like 9:30 or whenever the market opens, you try to buy you try to buy shares from your brokerage. Who is selling you those shares?
Oh, so I think for this IPO right now, currently I believe they have about 240.5 million of shares. So when you go for IPO process, the company will actually create new shares. It's actually out of thin air, right? But so those are the shares that will be issued to investors. Okay, because firstly we have all those allocations in the institutions, right? Of course, like your Salesforce, your Berkshire Hathaway, but also there's allocations to individuals like you and I. And of course, on the first day, there are people who are like IPO traders. They will definitely sell. So the shares are all allocated already before the ring bells, the ring bells, yeah. And so that people who want to sell, they will just sell, and you have to buy from them. So you're actually buying from people who have subscribed to the IPO successfully.
Okay, got it. So does your brokerage matter in terms of what the price is going to be when you buy into the IPO?
I don't think so, but some brokerages have more benefit, more access to IPOs. I mean, higher chance of subscribing and getting it, I guess.
Got it.
If you're at a more traditional bank or brokerage with significant influence in the industry, and you have a preferential relationship with them, then you might be able to have more opportunities. But as a retail investor, which is most likely all of us here, it really just matters like if you're trying to catch it right away, maybe like speed of execution and things like that. But who you use doesn't make a huge difference. Maybe Robinhood would be slower. I don't know. Okay, cool. I think that sounds like that's all for the IPO part. So let's talk about investment strategy. We have a lot of different opportunities here. We could just sit out of it, pass on it. We could buy as soon as possible at the IPO price and just hold it, and think that it will increase greatly and conquer its market share. We could wait for initial enthusiasm to kind of die down and then buy. We could wait for the insiders to sell after their lockup period expires before buying. We could short it if you think it's going to fall, or you could just trade it and maybe buy on the hype and then sell it when you think that the enthusiasm is down there based on the technical indicators. So what do you guys think on the investment strategy? Like, what are you considering? What are your thoughts? How confident are you in what you're honestly thinking about?
I think the multiples are really high right now, especially they raised their price. Forward looking is pretty rich EPS. To my mind, the way I allocate my money is I obviously look for the best opportunity. So why would I go into this stock that has such rich valuation? I can there's so many other vehicles around. There's the SPAC and there is the direct listing, and there are existing businesses that don't have as rich a valuation as Snowflake, and Snowflake is not even proven. I don't know. It could double. I don't know. It could, but just from my way of thinking about it, it's less risky if I went for something that's like the specs that are being announced that they don't have a target company yet, and I've been doing that for a little bit. So that's like the best place for me to allocate my money. The chances of a rise is much easier and safer. So I don't know. I'm probably going to sit this out a little bit and watch and see what's happening, because from all that we've discussed so far, their valuation is really high. They don't really have a moat. Yes, they do have Berkshire Hathaway. They do have Salesforce. But again, all that we've talked about, it just seems like it's not, and the valuation is really high. So it just seemed like it's not a sure thing. Nothing is a sure thing, but this is less of a sure thing to me. I don't know. Ask me tomorrow, I might change my mind.
I think that's a fair point. How about Bibiana? What are your thoughts now?
Yeah, I share the same sentiments as Kwong. Just because Warren Buffett and Salesforce have an investment in this doesn't mean that you should be investing into this company because it's hype. But for me, I still think it's a bit too early to tell now. Like, I don't really know if their growth rates, if they're able to keep up at this current growth rates of over 100%. Even though the CEO himself, he has like really good track records of listing and growing companies. So what I'm going to be doing is I'll probably put like less than 5% of my portfolio tonight when the stock market opens. And if the hype dies down and the share price like drops and all that, I'll take a look at the fundamentals again and decide if I'm okay to average down. I'll be more than happy to average down on a good company. And we have always invested in high growth companies. So as long as I feel that the growth is justified, I'm happy to pay at a slightly more expensive price for a company.
Yeah. So you think the revised valuation is reasonable, 100 to 110?
I think it's a bit expensive now, but then again, it's too early to say. So that's why I'm allocating like a small portion of my portfolio into it for now.
Okay. Makes
But
sense.
if it drops out, I'll be more than happy to, add on more.
Yeah.
When we say average down, do you mean you're gonna keep buying?
Yeah.
Okay.
Yeah.
So maybe I just share from my perspective as well. Currently, the annual revenue run rate for Snowflake is about 532 million. You do a 1 year forward estimation, I think they should be roughly hitting $1 billion at about $105 IPO price. If that's the IPO price, they will be trading at a forward price to sale of 26.5 times. So that seems to be quite okay for a SaaS company. But if the share price goes up, I think beyond 138.7 cents, I will not buy it. I think as an investor, we really need to have that discipline, right? To tell ourselves not to rush into anything. And when you're rushing to everything, then where's the value? That's not how investing should be, right? So the way I look at it is that this is overhyped, and I'm not likely to participate within this IPO tomorrow or the next 2 days, because the way I look at it, because they're actually issuing 28 million shares, and they are only issuing 10% of the entire enlarged share count. So it means it's going to be very tight. It's going to be a lot of hype, and you just let the hype dies down, and you just go into it. So and I'm just looking at the lockup period, right? So the lockup period is actually, let's see, it's actually 90 days, right? So I do see that. Actually, I was looking at the history of Frank Snowman. When he came in, I think he was being tasked to IPO the company, because at the end of the day, how do you actually attract quality talents, engineers, right? Is to tell them, hey guys, let's just work on it. 3 years, 4 years, the company is going to IPO. So I do feel that there's a lot of pent-up selling that will happen from existing employees, so that they can monetize on their investments. And we don't want to be the idiots that's receiving the shares on the other side of the table, right? So that's how I look at it.
Yeah, we don't necessarily want to provide the fat exits for the existing investors.
Someone else can do it.
Anyone have any similar or different perspectives? Does anyone think it's going to drop immediately and not come back up, or?
Sam, if I may, can I share a very quick valuation sheet that I use?
Yes, please do.
Just to share the valuations.
Yeah. You could do the share screen.
Yeah, so to me, I keep things simple. So basically, this is the amount of shares outstanding after issuing 28 extra million shares. And this is the new price here, $110 that they actually talked about. Also, by the way, for the person who just took a photo, please, this is just a disclaimer. This is not a recommendation buy or sell. This is just my own workings, all right? So the market cap, which is basically for newcomers, market cap is, let's say, if you want to buy over Snowflake after it IPOs, right? How much money do you need to buy out all the shares in the market? So the business will be worth 29,000 million. So this is about $29.5 billion. And for me, I just really look at it from a very quick price to sales, using the price to sales matrix. And at $110, the price to sales is 55, right? And if the company can grow 100%, it's currently growing at 120% right now. So if it can grow by 100% this year, when after it IPOs, right, your price to sales the next year will become lower, because your revenues actually grow, right? So you actually become 2 times cheaper, right? So I mean, if you think about it logically, if something doubles up in terms of revenues, so if you lock in the price today, right, it becomes 2 times cheaper 1 year onwards, right? So to me, I think Warren Buffett really kind of got a pretty good price, because there's kind of some margin of safety, right? Because if Snowflake can grow at 100%, all right, he's actually paying a price to sales of 27.7 times. And to give you some, and to give everyone kind of like how I look at this, you have this company called CrowdStrike that's growing at 80%, and its price to sales is actually 40 times. All right, so if you have a company that, let's say Snowflake can't grow 100% the next year, right? If it grows 80%, so let's just say the growth slows down, right? You're still getting it quite at a good price, right? Because other SaaS companies that are growing at 80%, right, is having a price to sales of 40 times. So if Snowflake can grow at 100%, right, Warren Buffett will actually his real price to sales, or what Kelvin Sito was saying of the forward price to sales, is 27 times, which is lower than what you see right now, the companies out there, which is growing at 80%, priced in at 40 times, right? So for me, to me, if the price is $110, I think it is quite a good goal, right? But if we look at it at, if we increase the price, so let's say after IPO, the price goes up to $170, all right, which is, I think, very possible because of all this hype. I won't be surprised if it goes up by 2 times, 3 times, right? That's where I'll be very cautious, right? Because you see, if the price goes up to $170, right, and if Snowflake goes to 100%, right, my price to sales is, my forward price to sales in the next year is 40 times. So in a sense, I don't really get this company cheap, right? In fact, the first year growth of 100%, I don't really earn much, right? I don't really earn anything because a price to sales of 40 times for a company that's growing at the same, almost the same rate as Snowflake is about 40 times, right? So in a sense, you need to wait 1 year to kind of like realize your gains, all right? So if the price goes up to $300 or anything, I mean, if the price of sales goes up to anything more than 100 times, I'll consider maybe using some option strategies to kind of buy out of the money puts, if for those people who are aware of options here, that's what I'll do. But I will definitely not put in like more than 1% in options, because options is something that's really short term. It doesn't make up the core position in my portfolio, right? So if it's anywhere between $110 to $170, I'll consider putting 1 to 2%, because why do I not put 5, 10%? Because how I see it is there's a lot of execution risk, right? What if they can't go at 100% or 80% or 60%? Because we are talking about really high growth rates here. And just some back of the envelope calculation. I'm not going to explain what's everything here, but let's say if I want to get a return of 30% in my stock returns, right? Snowflake has to grow at 70% for the next 5 years. And I think this is pretty hard, right? If you talk about growing 70% for the next 5 years, that is kind of like almost quadrupling your revenues over the next 5 years. So there's some execution risk here. As much as I know, Frank Slootman, he actually grew Salesforce from a revenue of 100 million to 1 billion plus. So that's about 10x. I would still want to be a bit cautious here. And I think there's no such thing as missing out, because if you look on in the early days, right, if you bought Walmart 10 years later and 10 years before, you still be making multi-baggers, meaning you'll be making 2 times, 3 times, 4 times your money. So I think there's no such thing as missing out here. And there's always going to be an opportunity in the future, right? Let's say if a recession comes at the end of the year, or if let's say Frank Slootman gets in a sex scandal or whatever it is, right? There's always definitely going to be opportunities out there, because I mean, companies are not perfect, right? And the thing about Wall Street is they expect everything to be perfect. They expect the numbers and everything to play out. So there's always going to be these pockets of opportunities for us to get in. Yeah. So just my 2 cents here.
Fantastic. Thank you for sharing that and explaining it.
Thank you.
Yeah, I do want to add that nothing you hear today is investment advice. Do your own due diligence. Past performance doesn't equal future results. But yeah, that was a great analysis of what they basically need to achieve in order to hit their various goals. Cool. Anyone think that it's, after hearing or discussing what we did today, that they're no longer interested, or they just want to just wait on it and see?
Definitely interested, but it's all a matter of a price, so just gotta be patient on those.
Yeah, personally, I feel the same way. I feel that the valuation's a bit rich. There's a lot of expectations for it, and it needs to execute very well in order to achieve its desired price, or to match its valuation.
I've got a question for everybody. I'm kind of curious, it's not one methodology, you buy and hold, the exit is really, really important. Do you buy and hold and sell it in a week's time, a momentum play, or so it's just so many moving targets, we're talking about 100% growth, and therefore the price is half price, at the analysis that was just done previously. But then I was just thinking too, and I haven't done my research, but just immediately, most of the numbers are done pre-COVID, and the way the world is going on right now, that we don't know what's going to happen. Is it going to be a K recovery, going to be a U recovery, going to be, a check mark recovery? We really don't know. So after all is said and done, there's so many variables, plus the moat isn't quite there. So back to my first question again, buy and hold for 10 years, buy and hold for, 2 weeks. I personally, because of the nature of the market right now in all that I'm doing, I actually am very much like a momentum player. I mean, I believe in Tesla. 8 years ago, I held Tesla, but recently I've been trading with it because of the volatility of the stock. Even Amazon, I have Amazon too. I just sold all of them, thank goodness. It went down to 30, I sold at 30, 33 or something. It's like 31 right now. So I'm just saying that these are really very special times, buy and hold. How long? I just want to listen to hear somebody else's, point. It's different times right now.
So I'm not a software investor. I'm extremely concentrated long term. I bet on jockeys, on very boring businesses. I've only probably done one out of comfort investment, which was a venture capital investment in a dog food company that took 14 years and 60x, much volatility. This Snowflake thing got me attracted for 3 reasons. First reason is it wasn't Warren Buffett. It was either Ted Wex or Todd Combs, and they have more information than anybody could imagine. So I bet you some of their businesses are using Snowflake. That's number one. Number two is the CEO, Frank Slotman. He joined in May of last year, and he's bringing his own team from ServiceNow. The guy doesn't need to work. The guy is 2 years. He loves horses. If you read about him, he's a moneymaker. The guy makes money, and he's a buy and hold. He doesn't trade. He doesn't have momentum. You buy stock 10 years, it goes down 30%. You average down. We live in an inflationary world. Things get better. So that's the second reason. The third reason is this business helps small businesses. You don't have to subscribe. So if you're a startup and you got to pay subscription fees, there's a fixed cost right there. This is a pay-as-you-go model. So is there a stick, and it's so easy to use. And if he brings in his ServiceNow, which is the way he thinks about the world, it's extremely customer friendly. I'm sure Frank is probably going to sell out in 2 or 3 years. He's 60-something years old now. He has probably a huge contract. IPO is going to pay him $25 million, and then acquisition, probably make another $1 billion. So those are the 3 things. I don't know anything about software. I don't know anything about tech. I actually avoid it. It changes way too fast. When gross margins are way too high, like 60%, someone's coming after you. You already have a bullseye on your back. But with something like this, where you also have a capital issue now. So we're going to go into inflationary environments. Credit markets, venture capital, and private equity is extremely tight. You have to have a really good story, and you have to have great relationships in order to raise capital now. So businesses that can get capital and IPO right now in this crisis are going to come out really strong. If you remember 08, 09, what changed the world? China. It was Tencent, Alibaba. They changed everything. So there's going to be a global reset now, and those that can make it through this are going to be volatile. Snowflake's going to be down 20, 30%. But in the scheme of things, it might be up 10 times in 3 years. You can't trade in and out of these things. That's not, at least I'm not that, I can't do that. I don't have time, so that's how I think about it. So that's why I asked, how easy is this business to scale in terms of labor? Because I know people may think there's an endless supply of software engineers, but I am of the view that good software engineers are not easy to come by. They're very hard. And software engineers, musical chairs, they all try to go for the next best company, next best deal. So that's how I'm thinking about it right now. And we haven't done a deep dive yet, but I joined this because I wanted to hear other perspectives about the world of, software and technology that I don't know anything about yet.
I have a question, guys. Thank you. Thank you, Pat, for that. Pretty useful. So is everyone thinking the long-term strategy is a sell to someone else? So if you look at visionary companies like Tesla, Amazon, you can see like their basic business as so big that it's just a matter of executing their first step, and you can see like stage 2, stage 3, it would be so huge. But with this company, it's okay, you're gonna be in a growing market, you've got a foothold in this growing market, and their 5-year strategy is exit unless they can come up with something revolutionary. That's kind of I'm trying to categorize this company.
I think Frank's gonna sell. You don't bring in a guy like that at his age with his experience and say, you know what, I'm gonna come here and take this company public, and then I'm just gonna retire.
Right.
There's no way. I mean, his ego is pretty big. I mean, if you've ever seen him speak or read about him, he's just not gonna retire. He's gonna close this chapter out, and I'm sure there'll be. I mean, that's my view. I mean, that's history repeats itself. Like he doesn't really have full control of the board. It's not really his company, right? So you bring in somebody for a reason at this level, and he only joined. It's almost a year and 2-3 months.
Yeah.
So that's kind of my view. But who knows? Maybe he might be here forever, but I doubt it. Especially if he's bringing his guys from ServiceNow, his old team. What are they're all going to retire together and not sell the company? They all want a nice fat exit package. I mean, these guys they're not doing it for charity.
Okay, so it's not one of those. I've got this vision 1, and then this is like stage 2, stage 3 vision, like 100x TAM type of thing. It's more like, let's milk it, let's get that cash stream, show some profitability in the exit. I mean, I think I'm trying to frame like what is the sell point.
For me, if I was a betting man, I'm betting on Frank. I bet on jockeys and horses, right? I don't bet on IBM because their CEO owns what, 25 basis points of the company. I bet on guys who own 20-30% of the company, right? Like and Frank probably going to own a few percent, but the board, Sutter Hill, and the rest of the team I think they own 30-something%, and they are not selling too many from what I checked on the cap table. So there is an exit strategy. The venture capital guys are forced sellers because they have to return money back to limited partners. So they may love the company, but they got to sell because they got to return money back to their LPs. Frank has got to figure out a way out. I mean, I could be wrong, but I mean, if he's bringing his guys in, just think about it. Your boss calls you, come join me in my company. You're not going to join just for a salary, right? Why would you, right, to work together? I mean, there's got to be some sort of gravy on top, but maybe I'm thinking too much like a Wall Street person, but that was kind of their playbook in the past.
Seems to make sense.
This is insightful.
It's funny for me because for a company IPO that has so much hype, and that seems like such an obvious playbook, it just doesn't warrant that kind of hype, because hype companies are usually companies that you can see, wow, there's like a huge vision behind it. But this is more just seems like ride the wave and exit out.
I don't see this as riding the waves and really exiting. If you really look at the technology, how people used to do things traditionally and how they're doing things now, I think it's really way, way different. In fact, one of the customers actually used to take 5 days to actually churn out their data, to analyze it. But now because of Snowflake, it's 8 hours now. So I don't think this is a company that is all fluff and hype and doesn't add value to the world. And I think to address Kwong, actually the recent results are actually based on July. So actually it does account for COVID, right? So even during COVID, they are actually growing as well. So I think I agree with Pat. There's no such thing as buying and holding blindly. We definitely, after investing, you have to see if the growth rates, if they do drop, they will definitely drop in the future as the company becomes bigger, right? Is the growth rate something that you need, or is it suitable for you? So for me personally, I know that I need to grow my capital at 30% to be financially free fast, right? So if I don't grow at 30%, anything below 30% is out, right? So for me, my exit strategy is if Snowflake growth drops below 40%, then I'm out. I'm on to find the next company that's growing at 40%. So that's just my strategy, and that's just how I look at my investments. So if the company continues to grow at 40% for the next 10 years, then I'll just hold it for the next 10 years, right? Because I think it's really hard to find a company that's growing at 40% and something that you dare to put your money in, like you have the conviction, you understand it, you dare to put 5-10%. I think it's pretty hard to find companies like that. And yeah, so that's just how I look at it.
Thanks.
For sure, it's hard to get that consistent performance year over year.
Yeah. Sorry, just now I didn't quite get it. Like Pat. So actually, I like the way you think. I think it's logical. I think I like your explanation of how things went. But in your view, so you're saying that Frank is a guy that he might sell out after a couple of years, or do you feel that he's someone that's out here to build something for the long term?
It's already. I mean, how much? I think he turns this business profitable. Mm-hmm. He recapitalizes it with debt, so we get a dividend as a shareholder, and he sells the company. I mean, who's going to replace him afterwards? I mean, the guy, he just this. If I were him, after 2 exits, I'm not going to come and work for. I don't need a job. Right. Like investing is all human psychology. That's all it is, right? Like Coca-Cola, it grows 3% a year. It's been the best investment for the last 30 years, right? If you think about it, it's the best return ever. So Frank, he's coming out of retirement. He's bringing his guys out too. That tells me something. That for them to do what they're doing, they must see something. And as people on this Zoom have said, this product is so easy to use. It's customer friendly. So call it the Walmart of whatever you call it now. I haven't fully analyzed it yet. We'll spend some time on it. But as I mentioned, the 3 things that got to me were Buffett, Frank, and the ease of use for small businesses that can't afford all these high SaaS company subscription fees. So Frank needs an exit strategy. Think about it. If you were him, right? Why would you come out of retirement to take a job? Doesn't make any sense to me. The guy sees something. He knows someone's going to buy him in a couple of years. I'm sure they put it out there, but the board and Sutter Hill got greedy. They're going to IPO. They're going to run it, right? They're going to get the valuation because their private valuation before the IPO already showed this company is valuable. They have major term sheets from so many people. Profitable. They do a debt or a bond deal. They recap it. So they'll probably get paid out 3-4 times. I mean, like I said earlier, they're not doing this for philanthropy here. They're doing it to make a lot of money. Because as everyone said, this is a good business. It's whether you want 40-50% growth. I'd be happy with 10% growth for the next 10 years. you know, and stable businesses. Because I think there's a switchover cost. And as someone said, CTOs or what do you call it? Chief tech guys want different type of cloud-based things. So I can't tell what the growth rate is, but I can tell right now, Frank ain't doing this for charity.
Yep.
My thesis always is to bet on the jockey. That's it. And when he leaves, I leave.
Right. Great point. Thanks a lot for the sharing.
Yeah. We are at our time limit now. Want to thank everyone for joining. It's been a fantastic discussion. I hope that everyone got something out of our discussion today. There's a lot of comments in the chats too, a lot of information. So we have this thing recorded and we'll probably turn it out in about a week or so. The whole thing will be there. And yeah, look forward to seeing you guys on the markets, whether you're in or out.
Cool.
Yeah. Thanks again for joining, everybody.
Thanks a lot, Sam, for holding this.
Thanks.
Thank you.
You guys, thank you, Sam.